EIN, the EIN is the number that is assigned to the business itself. And any business structure should obtain an EIN. But also, if you have not decided to choose a business structure and you are operating your business as a sole proprietor and you don't have employees, you don't necessarily need one, but it's always a good idea to have it. The reason for that is because you want to keep things separate from your personal and your business finances. And the best way to do that is by separating the unique identifier, right? That number that identifies your business and that social security number that identifies you as the individual.
Astrid, we do have a question here in the chat from Agustina. She's asking, what happens if I can't find the piece of paper that my EIN is on? The IRS said they only send it once.
That is correct. Yes, they only send it once, and that is another reason why it's so important for you to keep that information very close to you, or save it in a very important folder, or somewhere where you keep record of all of your documents, because that number is only assigned to you once. You might be able to retrieve it if, for instance, you filed any type of taxes with that number, and you'll be able to obtain a transcript of those taxes that were filed. Ideally, it's only sent to you once, so you may want to contact them and try to obtain the number, but it's very difficult because, again, it's for your safety. So it's not like you're going to be able to call them and just get that number over the phone. There might be some other forms that you're going to need to fill out. Okay, I hope I answered that. I hope that answered your question, Agustina. And all right, so let me just making sure that we are on to the next part here. Okay. So another important thing of having an EIN, like I was telling you before, keep it in a secure area. This is a sensitive number, it's sensitive information. It's like your social security. I keep repeating this because it's that important. When you make changes to your business, it's important that you obtain or notify the IRS of those changes, like the change of your business name, or if you, for whatever reason, moved or have a different location, report that information. And also make sure that when you file your taxes, that number and the address or any relevant business information is consistent with what you're filing with your tax returns. Okay. I see that Juan just shared a link with you all about the EIN. Thank you, Juan. All right, so we have a small group. So by show of hands or virtual hands, however you choose, would you please show or raise your hand if you have already obtained an EIN? I see one hand. And I don't see many other hands. Okay, Andres, thank you for answering. You have not obtained one. Okay, thank you. Okay, it's important to know this because when you start a business, and like I said before, you want to separate your personal transactions and your business transactions. So after you obtain an EIN, then you can go in and open a bank account with your personal tax ID for your personal transactions, and then the EIN for your business transactions. So that's it's a best way to keep your banking and your transactions separate, business and personal. You will not believe how many business owners continue to mix both personal and business, and I strongly discourage you from doing that. So keep that in mind. Okay, now here's something that is super common, and a lot of businesses struggle with this. what is the right structure for your business? And I'm very sorry, but I will say that it will really depend. I don't have a straight answer for you because every business owner in every situation is different. So sometimes you hear very genetic information provided in many channels, social media channels, where again, the information is general. So you don't necessarily have the answers that you need for your specific situation. And one thing that we're going to do today is we're going to cover the different types of structures. And based on your situation, if you would like to explore this structure, I'll be more than happy to answer if you're willing to share it with a group. So we can do that if you prefer, or we can just continue to use the general information for everybody. So we're going to start with the very simple sole proprietorship structure. This is typically when you start your business and you are at the very early stages of your business, but you want to keep full control of all the decision making. I can tell you right off the bat, to set up this is super simple, and you don't have to structure or pay any type of fees to get it set up. You simply start a business, and by default, once you start operating as a business, you become a sole proprietor. Some of the disadvantages here are that your personal and business debt is all in one, even if you keep your personal and business finances separately. You keep the responsibility in one individual because you are the only owner or the sole owner of that business, and you don't have any structure or any type of shield that protects you from that. The next disadvantage is that you may have limited access to capital. And the reason for this is because a lot of banking facilities or lending facilities will want you to have a separate structure and show books or show accounting books separately from your personal finances. One of the advantages also is that if you are a consultant, if you're a small startup, or you're a service provider operating as a freelancer, this is a perfect starting point for you. Okay, now the next one, this is probably one of the most famous structures in this business owner or the small business community. Most of the time, before clients come to us for help with their accounting needs, I might hear them telling me right away, I'm an LLC. What do I need? What do you need to file my taxes? And the answer sometimes is, well, it depends. How many people are in your LLC? What is the reason why you file an LLC? And here are the clarifications. So let's say I'm going to use an example of someone who originally started as a sole proprietor. Okay, I'm going to use Melina as an example. So assuming that Melina said, I will start as a sole proprietor, I have a consulting business, but now I want to file as an LLC or a limited liability company. What are the steps and why should I become an LLC? Number one, I would say, okay, do you have personal assets that you want to protect? That would be the first question. And if Melina says, yes, I do have personal assets, then I would strongly recommend that if the reason is that you have personal assets that you want to protect from your business activity, then that might be a good idea to elect a limited liability company registration or structure. One thing to acknowledge here is that the limited liability company is a legal vehicle. It is not a tax business structure. So my next question to Melina would be, okay, how many people are involved in this business? Or are you the only member? Or do you have more people or more members in this limited liability company? If the answer is, I am just one member, then automatically, I would say the IRS by default qualifies sole members, limited liability companies as sole proprietors. So I'm going to take you one slide back. If you are a sole member, limited liability company, you are by default a sole proprietor. Okay. Now, let's talk about the advantages. If you have a limited liability with, you are, limited to personal liability that we talked about, there is less paperwork and formalities. Some of the disadvantages, again, we're talking about limited access to capital, because as you continue with your business, you may want to expand, right? And as you expand, you want to have access to capital. You might need to buy equipment, especially if you're starting a restaurant business. You might need to cover capital to cover for your overhead or operating expenses. So you may have limited access to capital. And here's one that is super common. You are exposed to self-employment tax, okay? So as a small business, I do recommend having a limited liability company with the help, and let me just address this, with the help of a professional to set this up, because a lot of times, like I said before, this is a legal vehicle. So you want to notify, or you would want to seek legal help to do this the right way. It's my recommendation. I am not an attorney. I am an accountant. So when clients come to me asking to help them set up a limited liability company, I refer them to a legal professional for that same reason. So that is as far as limited liability companies. Now, let's
Astrid,
yes.
I'm so sorry if I could interrupt. It looks like Nancy has her hand raised.
Oh, yes, of course. Hi, Nancy.
So going back to the limited liability, what do you mean to set up the proper LLC? Like, is there more than, registering through the state, or like, what do you mean get professional advice?
Yes, typically, what I have seen very commonly used are things like, what is this website that is super common when they help you with LegalZoom, right? A lot of people use that option because LegalZoom allows them to, it allows them to do a legal filing of the company, and at the same time, the documents that are filed with the state, sometimes the licenses that you need in the city are different. So it's not just about filing with the state, but it's also having all the registrations that you need.
Okay, thank you.
You're welcome. Okay, so I'm going to assume that, continuing to use Melina as an example, I'm going to assume that Melina answered the first question where I said, how many people are involved in your business? How many members are there in the business? If she says, well, it's a friend of mine and there's more than one person or more than one member in the LLC, then the company automatically or by default is designed or assigned to be a partnership. And one of the advantages of being partners or having partners in a business is that you share those responsibilities, right? Sometimes you have a team that or you have that one family member or friend that is good at one thing and you are good at this other thing. So you both complement each other and you're able to share that management responsibility. So it's a good combination, but just know this, that if you are an LLC, by default, with more than two members or more than one member, with multiple members, you have already been assigned by the IRS as a partnership. unless you requested another structure, but this is by default. Now, some of the disadvantages is that, yes, you go into this business working together, uniting forces, but you also share the liability or the debts in the business. So it's important to know that, yes, you're sharing responsibilities, you're sharing the management, you're sharing all the benefits, but you're also sharing the debts that you're accumulating with the business. And sometimes it's super common. You will have conflicts, whether you work with a family member, with a friend, or just any other partner, just like anything, you might have conflicts. Here's why for partnerships, I strongly recommend to have a partnership agreement, have a legal document that indicates what are your responsibilities, what are the things that you're going to be doing into the business, and what are the benefits that you get from it. Okay. Now, the corporation, here's something that it's also very commonly brought up this year, particularly for the tax year 2023 that we filed at the beginning of this year in 2024. More often than in prior years, people came to us saying that they wanted to become an S Corp, or an S corporation. An S corporation stands for a small corporation. And I'm going to cover this in general. Because S Corps, I believe it's just that social media has been more active as far as suggesting this structure to small business owners. And people say, well, I was told that I can pay myself a certain amount if I have a business as an S Corp, or I heard that this is the best option for me. I would say that it really depends. Okay, not every business is suitable for a corporation status, and not every business owner qualifies to become an S Corp when you file taxes. So that part, I would leave it open because there's so many details that go into becoming an S Corp. But one thing I would say, I'm going to continue to use Melina as an example here. So we talked about Melina being a sole proprietor. If she has more than one member in the LLC, she is a partnership. But let's say that Melina, as a sole proprietor, LLC owner, she decides that she wants to be structured as an S corporation. At that point, she would have to work with her accountant and request through a form that needs to be filled out to request to become an S corporation. With the help of the accountant, they can submit that form to the IRS and wait for that approval. Now, once the IRS approves that Melina can become an S corporation, or her business is structured as an S corporation, then we can start talking about all the benefits. Ideally, once you register your business, you have 90 days to submit the form. The form is 2553 that, with the help of your accountant, should be submitted to the IRS to request to become an S corporation. All right, now why is a corporation attractive? Well, because you have limited personal liability. Again, you are separate. You can expand, you somehow become more attractive to growth and expansion. But I do want to specify that there are two types that we're going to cover. They're not the only types of corporation, but for this presentation, we're only going to cover two: the S corporation and the C corporation. One of the disadvantages, as I'm pointing out in this presentation, is that if you are a C corporation, you get taxed twice. So you would want to be taxed or file your taxes as a C corporation separately, and then separately for your business. I believe we have a question there, Melina, I'm not sure.
Yeah, it looks like Nancy Hansen shared that she's looking to open a coffee shop.
Mhm.
She's disabled and doesn't drive. She does have an LLC already, but it's just herself. So I think she was providing that for the example.
Ah, okay, okay, perfect. So in that example, Nancy, thanks for sharing that information. You are most likely, by default, assigned a sole proprietorship status. And I'm going to go back 2 slides here to show you that for partnerships and limited liability companies, partnerships, and S corporations, those are considered pass-through entities. And notice how I share that as an advantage here, because when you file taxes for the business, and that gets passed through your personal income, you don't pay taxes twice. You only pay taxes once when you file your personal taxes. But when you are a C corporation, one of the disadvantages is that you get taxed twice. I recommend the C corporation status for larger businesses, or if you have that plan to grow more your business, or if you're looking for investors in the business. So let's say that you have an idea that will require multiple investors, and by that I mean you would need capital to, continue or to get started with your business, and sometimes this structure is more attractive. So I'm going to do a little pause here and see this topic sometimes is a little more complex. So if there are questions, I can stop now and open the chat for questions, Melina.
Yeah, it does look like we have one from Agustina. She's asking, what happens if you've registered as an LLC, but later take on partners as minority shareholders? Should you convert at that time to an S Corp or assign BOD positions? You don't have to answer this right away, but of course we're addressing it now.
Okay, wonderful. Great question. And I would say it really depends. Becoming an S Corp, it's not just based on the general idea of having pass-through income to all shareholders. And you use the terminology very well there, because you said shareholders, not partners. So you're saying that you're bringing in shareholders, so you're giving them something in return for having a piece of your business. So they're not partners with you, they own a piece of your business. As that happens, let's say that you want to bring in more than 100 shareholders, then right away I would say an S corporation is not a good structure, because it doesn't allow more than 100 shareholders. But if you say, no, I only have a couple of shareholders, then an S corp might be a good starting point. And from that point, you determine who has what percentage you and all the shareholders will have as they join into your business. Another thing that is important to differentiate is what type of involvement you want them to have. Are they passive shareholders, or do they have any type of say-so in the business? Or what type of capital are you giving them? Are you giving them any shares, right, for being part of your business? So all of that has to be established.
Yeah, Augustina commented passive minority shareholders.
Okay, so if that is the case, determine the percentage that you want to give up from your business, because this is you giving them in exchange of something, right? So if they are passive minority shareholders, is it in exchange for capital or in exchange for any other type of equity? If that is the case, that has to be documented properly. So if you become an S Corp, that means at the end of every tax year, when you file taxes, your shareholders and you as the business owner, you will receive something called a K1, a Form K1. The Form K1 indicates all of the net values that each shareholder will report in their personal taxes. So, so all of that is important to consider. There are other benefits, and one that it's very common or happens all the time, and that question gets addressed very frequently, is can I pay myself wages or a paycheck or salaries if I own a business? The answer is it really depends on your structure. So if you are an S Corp shareholder, yes, the answer is yes. You are required to pay yourself wages or a reasonable compensation to continue to pay yourself and to remain an S Corp structure. Okay. So you decided on 5% of any profits. I see that from Agustina. So 5% of the profit, and I love it how you're using these words that are key here, because profit may differ from net income. And net income typically is anything after operating expenses, whereas profit is your sales minus cost of goods. So that becomes your profit. And then you still have to deduct all of your operating income. So I would say that if you decide for the net income or loss to be 5% to the shareholders that are going to join, they will receive a K1 to report that 5% income or loss, regardless of the percentage that you assigned. If you're going to keep more than 90% of the stock in your company, then it has to be documented properly. I'm really excited about that structure that Agustina is mentioning. It sounds really interesting. Thank you for sharing that. All right. Yes, ma'am.
Before you continue, can you give me the two terminologies that you just used? The net income and the net profit?
Yes. And we're going to talk about this later on also in the basics of accounting and when we do the live demo. But I'll tell you briefly right now, a net profit is typically sales minus cost of goods sold. And then that is your profit. Then you have operating expenses. Those expenses, once they get subtracted, you get a net income or net loss.
Thank you.
You're very welcome. All right, so there's time for a poll question, and this is more like a test. Can you show me, or can you tell me, true or false? Do both LLC and S corporations offer a pass-through taxation that allows business income to be reported on the owner's personal tax returns? True or false? And you can type it in the chat if you like. True. I have one true. Okay. And we're going to close this in true. Thank you, Tanya. And 5, 4, 3, 2, and 1. All right. Yes, you are right. The answer is through. These are known as pass-through entities. Awesome. All right. So we're going to talk a little bit about record keeping. So we have moved away from a business structure, and I wanted to address the business structure because that tends to be a very common question, like I said before, when I first meet with my clients, and I wanted to make sure that we touch on that before we talk about any record keeping or any finances. So let's start by addressing a myth, and that is that you can only report expenses or deduct, or expenses are only deductible if you have an LLC. That is a myth. I hear a lot of videos on social media where people are saying, become an LLC so that you can take advantage of X, Y, or Z deduction. The truth is, you can make deductions, business deductions, the moment you start a business. And you start a business not necessarily when you sell or when you receive money for the business. You start a business the moment you operate as a business. And the differentiator here is, are you doing this activity, let's call it activity for now, for the purpose of making money? Or are you doing this activity for the purpose of entertain yourself or as a hobby? So that is the differentiator there. So if you tell me, I like to cook, so as a hobby, I'm going to start making dishes and I'm going to set up a catering activity so that I can just distribute it to this organization or my kids' school, and it's a hobby of mine. I have zero intentions of making money. Then you already specify it's a hobby. And no, it is not deductible. But if you tell me I started or I am going to start a business activity and I intend to sell these goods because I'm going to start my catering business, then the moment you call it a business, you can start deducting the cost of doing that business. So you don't have to decide now if you are an LLC, an S Corp, or a partnership. The moment you start with a business activity, you have the intention of operating it as a business, you can start deducting the expenses associated with that. Okay? Nancy, you raised your hand.
It doesn't mean you have to be making any profit, correct?
That is correct. You nailed it, yes. Because you can have a full year or more of losses, but you are operating as a business. All right, so we're going to talk
Sorry,
about.
Astrid, if I could interject really quick.
Yes,
Tanya
yes.
does ask the question, do you need to have a business bank account to start deducting?
I would say ideally, I like the idea of having separate business and personal bank accounts, because you don't want to commingle the two. So there is no code that specifies in the IRS code that says specifically that you need to have a business expense or a business account, I'm sorry. But in order for those two to be separate and not to mix personal and business, I always recommend to open a separate business account. It's cleaner, then it'll be less confusing for you as you continue to grow in your business. Okay, now let's talk about what are the things that I can deduct. And technically, anything or any business expense, according to the IRS code, must be ordinary and necessary. So, for instance, ordinary means it's the type of expense that it's common and accepted in your industry. So I'm going to use the restaurant industry, since a lot of you are in the restaurant industry. One thing that is common and accepted in your industry are going to be raw materials, right? So you have to buy ingredients to make your food. So those are ordinary expenses. What are the necessary expenses of your business? Things that are going to be helpful to continue your business or your trade. And those things can be your rent, if you're renting a kitchen, or besides your materials, you're going to need supplies. You will need maybe the containers, all the things that you need to make your business or to help you continue with your business. And one thing also to differentiate here is that your business does not have to be indispensable. And that means in some cases, people go over the board with the type of expenses. So I'm going to use travel as an example. Maybe traveling is part of your business. It's needed for you to continue your business. So you need to travel to a convention. But you don't need to stay in a five-star hotel for the business to, to continue, or for you to go to that conference or to that, to go to that business event. So be mindful that extravagant expenses are not necessary for the business. Okay. Now, we talked briefly about cost of goods sold, and I want to spend a little more time here because we have a lot of you business owners that are in the industry, in the food industry. The cost of goods is the cost of producing the item that you sell. So we're going to talk about your, like you see in this picture, your raw materials. So this picture looks like a bakery, right? So you see sugar, you see flour, and all other ingredients that are needed to make or bake the goods that the business sells. This part is super important because it allows you as a business owner to track an inventory of your ingredients. So Nancy, may I use your business as an example? So let's assume, if I remember correctly, you said that you are starting a catering business and you're going to sell appetizers, right? Can you give me an example of something that you sell?
I do it's either mini pancakes
Okay.
or it can be a charcuterie cart, like it would be like a kind of buffet style where you come in, get a plate and choose what you want on that plate.
Okay, so let's say pancakes, right? So for pancakes, I'm not a cook, and you'll be thankful that I'm not a cook. So for pancakes, we have flour, I would assume milk, sugar, or maybe water. I don't know. But let's assume you have milk in the mix. So for those ingredients, they are going to be automatically entered as part of my cost of goods sold category. And for that, we're using the terminology or the abbreviation COGS because it'll be a very crucial number when we start looking at our financial information. So if I want to track the inventory of the materials that I use or the raw materials that I use, I would want to keep track of how many bags of flour that I need to purchase. So let's say that for one event, I needed 5 bags. So that was my beginning inventory, was 5 bags of flour. As the event happened, I had 2 bags left. So you used 3 bags. Your ending inventory was 2 bags of flour. And this is how you start building, that inventory part, that it's important because you in the restaurant business, your inventory is not something that it's very it is tangible, but it's difficult to measure, right? Because you can buy 5 tomatoes, or you can buy a bag that has 12 tomatoes. The idea is that you track the inventory and you do this either on a weekly basis, or you go to the fridge, or you go to your kitchen and see how many units of that raw material you have left based on how many you started with in any given period. So this term is really important for your industry, and we're going to look into that as we move into the demo that we're going to do. Okay, not in this slide, but when we review the demo of that accounting software, we'll have a chance to look at financial statements. Now, we're going to talk a little bit about taxes. So if you're not excited, I encourage you to stand up, shake your arms, do some movement, and pay attention, because this is going to help you. So stay with me. I know it's at the end of the day, and I really thank you for being here, but this is important. All right, taxes. Why are they important? Well, because we, unfortunately, have to know the tax regulations based on not only our personal income, but our business income. What are we responsible for? And I often get asked if I should pay as a business owner, do I have to pay quarterly tax payments? How many of you here save money or have set money aside for taxes consistently? And you don't have to answer if you haven't, it's okay. But if you have, if you're free to raise your hand and let us know. I see a question in the chat there. Agustina. Yeah, sometimes we don't have enough money to put aside for taxes, right? Okay. So I saw a question here. Juan, would you please is it from
Yeah,
Juan?
it does show it was from Juan, but
Oh,
just
okay.
as he asked it, you happen to be covering it on that slide. So
Okay.
you caught it before we even needed to get into it. So thank you.
Okay, awesome. Awesome. Okay, I'm making sure. Again, that's the advantage of having a small group so that we can address these things as they happen. All right, awesome. You're with me. Quarterly tax payments. Quarterly tax payments, just like the word says, every 3 months in a tax year, payments ideally should be paid to the IRS. So we started with Melina as an example. I'm going to continue to use Melina as an example. So let's say that Melina, as a either sole proprietor or a partner or a shareholder, because regardless of what structure she chooses, she has or may have some type of tax responsibility at the end of the tax year. So the quarterly taxes are not just for federal purposes. If you are in the state of Oregon, you are paying taxes to the state of Oregon. And if you are in Washington, you don't have to worry about state taxes for personal purposes. But you do have to worry about the Washington Department of Revenue because as a business owner, you need to pay either quarterly, monthly, or yearly taxes for or collect taxes with your clients if you are in the state of Washington. Now, if you are in Oregon, you also have to pay quarterly taxes. And those are going to be in the form of income taxes, maybe payroll taxes, and business tax. I see Nancy with her hand raised.
When do you start paying those quarterly taxes? Like the first quarter that you register your business, or, is there a certain time?
Yes, great question. Great question, Nancy. And it aligns with when you first register for the business. So let's assume we're going to use this month, right? So we're in the month of June, and you decided to start the business in the month of June. The first quarter is January through March. The second quarter is April through June. For that second quarter, if you start your business in June, you fall within that second quarter. That means that your responsibility to pay the second quarter is the following month, typically. So the 3 or the 4 quarters is January through March, which your taxes are due normally in April or the 15th of April. Then you have April through June. Your payment is typically due in June. And then you have August through September. No, am I wrong here? July through September. And the last quarter is October through December. I'm going to share some links here after the break where we can have the exact due dates for the IRS. So I'm going to briefly cover them. April 15th, June 15th, September 15th, and lastly will be January 15th of the following year. But I'll share the links so that you have that information. And Juan has his hand raised.
Yeah, so just a question, with an example. Let's say that a business is a sole proprietor business and they've been paying taxes with, like, the person is paying the tax for the business. How would you recommend it for a transition of like paying the business taxes as the business instead of as the person who owns the business?
Okay, this is where having a sole proprietorship is pretty much reporting everything in your personal taxes. So when you are a sole proprietor, your income from your business is reported in a form called Schedule C, which is the summary of your revenue or sales and your expenses. That is a form that is attached to your personal taxes form. So it passes through. You're paying taxes as a unit, although you have business activity included. So to answer your question, you don't separate your personal taxes with your business. You pay taxes as an individual unit.
So then in that case, you don't do quarterly taxes, you just do it like a,
Do.
you do?
Yes. Let me show you something. I'm going to stop sharing here and I want to bring up this form. And we're going to use this form for the year 2023. And I'm going to use this other form. Okay, so let's put these two things together. And I'm going to share this one more time. We have time before our next break. Right? Can you still see my screen?
Yes, I can see a 1040.
Okay, excellent. So the next one is this. Okay. Now, this is a blank copy of the 2023 1040. As you can read from this, it's an individual income tax return. So when you file taxes as an individual, you most likely have to file it with this form. There are some exceptions for senior individuals, but for the majority of the people in the group, it's a 1040 form. Now, the first section here, after your personal information is filled out, the first section includes income, all the sources of income. And you see how it's separated by income? So from here, you're going to file or you're going to report income from all sources, including income that you received from business activities. And that normally gets reported here in line 8, and it says Schedule 1. What that means is that it'll have a summary of any additional income that you received from other sources. That other possible source, if you own a business, is this form called Schedule C. And notice how it says is a profit or loss from business for sole proprietors. It gives instructions to attach this form to Form 1040. So here, this is the explanation of your business. So assuming that you are a business owner, your tax professional, your accountant will include the business name, the type of business that you have, the tax ID for the business. Notice how there's a space here for your EIN. And or if you don't have an EIN, you will enter your social security number. But here you have the option to show income and expenses. You split them all by different categories here. And we talked about this item here, cost of goods sold. So here in this section, this form or this schedule is called Schedule C that gets attached to your 1040. So when making payments or when paying taxes, you are paying taxes from all of your income sources combined. Okay? Did that answer your question?
Yeah, but then you do this, so like when you do the 1040, like a normal regular person that doesn't have a business, you do that once a year, right? How do
Yes.
we do the quarterly thing?
Excellent question. So here, now we are done with the income part of it. Now let's talk about payments. When we receive a W-2, right, when we are individuals that work for somebody else, we receive a W-2, and then that money that we have sometimes it has withholdings, right? So you're going to see that you have money withheld by the government. But if you're paying things ahead of time, then those taxes are going to be specified as estimated payments in this section. So estimated payments that you made quarterly by the due dates that I just mentioned, April 15th, June 30th, September 15th, and January 15th. Those are typically the 4 dates. So those are going to be your estimated payments for quarterly payments based on your business activity. So that money that you paid will be entered here in this section.
And how do you know how much do you need to pay?
It depends on your business income, and it is something that you should definitely address to your accountant. When you work on this, typically what I do with my clients is I give them an estimated tax schedule as we work on their taxes. So anybody that I work with to file their 2023 taxes, we gave them an estimated schedule payment. All right, I have another question here from Agustina, and she's asking a very important question that I really, I didn't have a slide for it, but it's super important. City of Portland taxes, and are you responsible for things like TriMet tax? The answer is yes. The City of Portland or Multnomah County, they have a combined tax return. And the combined tax return will typically include income that was earned in that county and in the city. So the minimum payment sometimes is $150, depending on your business activity, that you have to send separately. That tends to be filed annually at the same time when you file your business taxes or your personal taxes with the IRS. And ideally, you would want to send that on the same due date. One thing that is it's very common in the county of Multnomah County and the city of Portland is that in order for you to make payments electronically, you have to register with the city and obtain a business ID number so that you can pay those or file those taxes or pay those taxes electronically. If you don't have that number, chances are that you have to mail in the form at the same time that you're filing your federal taxes and your state taxes. And I believe we have 3 more questions. Oh, Nancy, you were raising your hand. Yes, Nancy.
I think she mentioned she was just figuring out how to do the raising of the.
Okay. Okay, great.
But it looks like Lizette has a question of how does this apply if you're still at a stage of determining if it's a hobby or a business and earning money under $500, just as an example?
I think it really depends on what you decide. You have the remainder of the year to determine if you want to continue as a business. Because if it's other type of income, trust me, the IRS has a space for you to record this under other income. So if you're not sure if you're going to pursue this as a business or is something else, then you would notify that to your accountant and enter that information under other income. And the reason why that is important is because you may not be subject to self-employment tax if you're not a business. So that would be something to keep in mind. Okay, so we continue with this and
Sorry, it does look like we have a hand raised from Nancy Gutierrez.
hi, Nancy.
Yes, so I know how to do the quarterly taxes for the state, but how do you file the quarterly taxes for the IRS, for the federal part?
Okay, so to send your payments, you mean, because you don't necessarily have to file them. And one thing to differentiate here is that you are sending quarterly tax payments. Okay, so you are not necessarily, oh, sorry, I can't get back to my slide that we're going to continue here. Everybody can see my screen, right? So we're talking about quarterly payments. And so making payments to the IRS on a quarterly basis typically requires that you have a voucher, right? That includes your tax ID number, your name, the amount that you're sending, and to know or to have an estimated amount. If you don't have a schedule that your accountant prepared for you, then I would say at the very least, calculate approximately 25 to 30% of your business net income and put that money aside. Right? If you need to put it on a savings account and you're going to call it for tax quarterly payments, then go ahead and do that. But do keep in mind that these quarterly payments will have to be saved, or you might be able to send them with a voucher. There's another way too. You can go to the IRS website and determine that you're sending a payment for quarterly estimated payments. So if we are currently in the year of 2024, so we will be sending payments for this year. So those are estimated payments.
So when we're gonna do quarterly payments, say I'm still in the planning process of my business. Do I still have to do the quarterly payments even though I'm not at a profit?
The estimated quarterly tax payments are in the event that you may be having a tax liability. So even if you don't have a profit, you may have maybe income from other sources, right? So it's very common that people have W-2 income or any other type of income. So in general, you will be sending tax payments for all the sources of revenue that you have. And one thing to keep in mind is that even if you don't make a profit, if you're sending estimated payments ahead of time, that money will be sent back to you once your tax accountant files your taxes and you pretty much reconcile, right? So you will have the money that you made, what you should have paid in taxes. And if your estimated taxes were more than what you calculated or your tax accountant calculated, then that will be sent to you in the form of a refund. So you don't lose that money.
Astrid, it looks like Agustina had a follow-up question and asked, so the 150 is due regardless of profit or loss. What if you're operating at a loss?
And you're asking this for Portland, correct, Agustina? Yes. So the city of Portland and we were going to touch base here a little bit about federal income tax, self-employment, state and local taxes and payroll taxes. It's a lot of taxes here, but addressing it back to Agustina's question. What's important about this is that when you start a business if you are a corporation in the state of Oregon, and if you live in Multnomah County and you make business in the city of Portland, you will most likely have to pay the $150 because you are registered as a business or you have a corporation. But if you are a sole proprietor, you may not have to pay the $150. Okay. Okay, so here is yes, ma'am.
I'm so sorry to interrupt. I
Wonderful.
want to just give a time check. We're at
Thank
6:50.
you.
And I know we wanted to take a break.
Yes.
So whenever you
Yes.
feel is a good time.
Okay, so here is a list of taxes to consider for quarterly tax payments. We talked about federal income tax, which includes self-employment tax. We talked about state income tax, local taxes, and one that is very important is payroll taxes. So for folks that have a business with employees, this is crucial, because you have to ensure that you are sending, and this really includes forms and payments to both the IRS and the state. If we have anybody in the group that already has employees, I'll be more than happy to stick around after the presentation to answer any question that applies to that. But from what I remember, we don't have people that have employees. So yeah. And so after this, we can take a break for a few minutes, and we can continue. And next time we come back, we're going to talk about bookkeeping. We're going to talk about accounting software and address any questions you may have. What do you think? Ready for a break?
Yeah, I just wanted to say thank you to everybody. This has been some great questions, taking advantage of Astrid being here and really asking important information. But we do want to take a 10-minute break. So looking at the clock here, it means that we'll be returning at 7:02. No need to drop off the call. Just turn your camera off, make sure you're on mute, and we'll reconvene here in 10 minutes. So enjoy your break and looking forward to the second half. Thank you.
Show of hands. In this group, do any of you currently use software or accounting software to manage your business? If you can reply in the chat. Okay. Good to see some options. Oh, okay, good. Okay. Do you mind sharing what accounting software are you using? Either one. Yes, Agustina, you can share, or Nancy. QuickBooks. Awesome. Is it
I use
online?
QuickBooks too.
Okay. Is it online?
For me, yes.
Okay, cool. All right. So today, for those of you that are not very familiar with QuickBooks, what we're going to do is we're going to do a demo of what QuickBooks is and what is the current software. Just know that there are a couple of options. It's not just QuickBooks in the market. There are other options for accounting software. One that is, I would say, the competition for small businesses is that is Xero. They have been around for many years now, and they do handle the same, or they have same features as QuickBooks Online. Another one that is fairly new, it's called FreshBooks. And I would say that FreshBooks can possibly do half of what QuickBooks Online can do. They are a type of software that it's ideal for consultants, not ideal for inventory tracking. So I do not recommend it if you have inventory tracking another one that I hear commonly is Wave and Soho Books. Wave it's very simple to use. I know it's cheaper than QuickBooks. I personally don't have experience with it. My understanding is that they don't handle inventory very well, like QuickBooks can do. So for QuickBooks Online users, I know that sometimes it's confusing because it tailors a lot to accountants more than business owners. So it has some, some business owners get frustrated because the terminology is just, confusing. But just know that the reason for that is because QuickBooks Online was designed for accountants and eventually became a user-friendly platform that now it's used more commonly by small business owners and also accountants. So they kind of try to mix the two, and unfortunately, a lot of people still get confused with it. All right, so here's what we'll do. I have a company that it's a sample company. It's not a real business, but we're going to try and do transactions that will later give us financial information that it's useful for the business. Okay, so we're going to call this business, as you can see here, it's called Craig's Design and Landscaping Services. A little disclosure here, I do not work for QuickBooks. QuickBooks is not paying me to do this. I am showing you this because it's one of the most commonly used softwares. I use it for my business and for my clients. So to me, it's simple, and the fact that it's on the cloud, it's a no-brainer because my firm, my practice is 100% virtual. So that is one of the reasons I chose this platform. So here is, I'm going to give you a quick navigation of what the menus are. So on your left, we're going to call this your master menu. Okay, here we're going to have different options or different ways or tabs. If you use Excel, you're probably familiar with sheets or tabs. So we're going to try to move around this depending on what we're looking for. Now, I can close this or I can expand it. I'd rather keep it open so that I have my options there. Now, in terms of the settings of the company, of the software, like many softwares, there are going to be settings that need to be designed since the beginning when you start using a software. So here, this little gear icon at the top, it's going to allow you to do different things based on your company. They call it lists, and I'm going to spend a couple of minutes in this section here. Or additional tools. We may not use these tools because it's not really relevant to this presentation, so we're going to spend more time here in lists and company. Okay, for those of you that speak Spanish, one thing that you can do to translate the menu to Spanish is you see the three dots. If you're using Chrome, let me take the step back. If you are a Chrome user, you can click on this three dots. And from here, I can use the translate option. And under this translate option, I'm going to choose another language. And if my language of preference is Spanish, I'm going to translate the entire page. Okay. Now, keep in mind, this is a Google translation, so it is not 100% accurate to how we normally speak Spanish, but it's very close. Okay, so that is that option. I'm going to switch this back to the original, which is English, for the purpose of this presentation. All right. Okay, so we're going to start with this little gear icon to the right. And what I want to show you here is that under the account and settings, you are able to customize the look of your company. So each section has this little pencil on the upper right-hand corner that you can type in the company name. So in this case, Nancy, can we do this with your business name? Do you mind?
No, I don't mind.
Okay, what's the name of your business?
503 Snack Cart.
503 Snack Cart?
Yeah.
Okay, awesome. Okay, we don't need to enter anything else. We're gonna save this. And we're saving it. Now we are calling this business 503 Snack Card. And it should have saved it, but it didn't. There we are. Now we are 503 Snack Card. All right. So what we're going to do next is I told you that we were going to spend some time under the lists. So what I want to do is I want to add products or services that I am selling. Remember, this is a sample company that I'm using. So this company is a landscaping business that sells fountains and other gardening materials or services, but we're going to ignore this. What we're going to do is we're going to add a new product, and products or services can be either inventory, non-inventory, or services. I'm not going to touch too much into the bundle part of it because that can get confusing. But let's talk about inventory. These are items that if you are reselling them, you would have to record that as a individual unit. I assume for Nancy, you're not reselling items, so you're providing a service, most likely, right? So that service, we're going to call that, and I'm going to keep it very simple, catering. Now, this is a product that, or a description here, we're going to say that it's a service that you sell to your customers. Yes. We're going to leave this empty here because we're not going to assign a rate. We're going to determine that later on. And an income account, it's called a service. And I'm going to touch base on this in a little bit. Now, I'm going to save this and close. Now we have created something called catering. With this, I'm going to create sales. So I'm going to assume that we have a starting point. For most restaurant businesses, you're going to have a machine, right, where you swipe your cards or where you're accepting payments. Do you have one of those, Nancy?
Yes, I have a Square.
You have Square. Okay. So Square is a little different because Square already takes in the money and then that transfers over to your bank. And from your bank, it normally connects with an accounting software. So the typical steps or the cycle that normally happens in this process is that your POS system, it's called a point of service system, excuse me, you have that machine where you have your clients swiping their cards, right? And that sale that happens at that moment, you're going to record it and transfer that into your bank. But what happens in the process? Square charges you a fee for processing that payment, right? So your sale technically is not the deposit. That is the final result. You have fees that are associated with that sale. So that fee has to be recorded properly. Okay. So we're going to go with now the main menu or the master menu, like I told you here on the left. I'm not going to spend too much time doing the technical part of the software because this is not a training for the software. I just want to show you examples of how to record a sale, how to record an expense, how to run reports or how to read financial reports, and how to put all of the information that we learned together.
Astrid, we do have a quick question from
Yes.
Agustina asking, are credit card processing fees a write-off?
Yes, ma'am, they are. They are expenses. Oh, excuse me, I don't know, something It's itching my nose. Sorry about that. Okay, so now we're going to create a transaction. We're going to create a sale. We're going to create an expense. We're going to create a purchase of materials and all of that cool stuff. Before we get to that section, I do want to tell you about this. This is called a chart of accounts, or in Spanish, this is, may I say this in Spanish, Melina?
Yeah, that's fine.
Okay, a catálogo de cuentas. So a chart of accounts is going to be like the backbone of your business. Transactions, not necessarily the business itself, but the transactions of your business. So you're going to have things that are going to be divided based on what part of what report they should be reported in. So for instance, notice how these things are divided by checking accounts. Then they are your inventory. And right before we get to debt, we have things like vehicles and things that belong to the business. So we're going to categorize this first category as things that you own. So the things that you own are going to be in this category called assets. Right underneath that, it's going to be your liabilities. Liabilities are things that you owe to other people or lenders, right? In this case, you have credit cards, payments to tax agencies. And lastly, you're going to have things like balance equities, or more or less equity accounts that translate to your contributions to the business or how you take money out of your business. Under that, we have another section called income. Income are the services or the things that are needed in order to report a profit and loss statement or an income statement. Then underneath that, we have your cost of goods sold that we talked about, and we have expenses. This is part of your chart of accounts. So for the purpose of this presentation, you're going to hear me tell you, we're going to use an income account, or we're going to use a bank account. So it doesn't necessarily mean the account language is not what you have in your bank. So it's going to be part of your chart of accounts. Again, for the purpose of the presentation. Now, we know that we have people in the restaurant business, so we want to add a cost of goods sold category, right? So I'm going to add one new account, and I do that by clicking on this new green button. And I'm going to create this. It is an expense, but I want this to be a cost of goods sold. And from here, I want this to be my supplies and materials. And I'm going to give the name of, because we talked about this, we're going to say raw materials. It doesn't mean that you have to call it that. I'm just going to use that because that's what we refer to here when we talked about materials. Or how about flour? So it's understood that it would, no. Let's call it raw materials. I don't want to confuse you. All right. So we have that. We save it. And now I just created this raw materials category here, and it's under the account type called cost of goods sold, and it's part of my supplies and materials. Okay. Now let's record a sale and see how things are going to reflect. So let's say that Nancy had a service that she invoiced her client. Is it very common, Nancy, that you have orders ahead of time and you get paid when you deliver them?
Yes, actually for my business, when I do invoices, I do require a 50% deposit. So I would get 50% like before and then 50% when I deliver my service.
Okay. Excellent. So Juan, you're mentioning something in the chat about Wave?
Yeah. There's just I've noticed so that's the one I use. I've noticed that I think this is what you're doing, like just categorizing every sort of transaction. And once you do a few of those, like it learns like normally from this vendor or whatnot, like it's always this type of transaction. It kind of like fills out the rest. And then
Yes.
you can tell when it makes mistakes and you can just correct them yourself.
Yes, great point.
Okay,
QuickBooks
that's the
Online
thing.
has the same ability to do that. We're going to explore that in a little bit, but it's going to be under bank transactions. So great point, Juan. One thing that happens here, and the majority of accounting softwares are doing this now, which it's really helpful for you, the business owner, because it gives you more opportunity to buy different products. So your accounting software should be able to connect with your bank and connect, sync, or talk to each other, whatever you feel is more comfortable. But when these two sync, you're able to view the transactions in real time. So you don't have to enter transactions manually. The reason we're doing this now is because I want to show you what would be the easy steps or the step-by-step process in the event of having to create an invoice, like Nancy mentioned, and how that invoice will be sent or delivered to a client using the income account, cost of goods sold, and other expense accounts. But yes, it's a great point, and it's a great tool that it automates a lot of the processes that you have in your accounting software. One thing I would say, being able to use your accounting software, it's not enough. It's important to understand the structure of a financial reporting so that you make less mistakes as you start categorizing these transactions. So let's say that we're going to create a new invoice. So we can do that by clicking on sales. We're going to invoices, and we're going to create an invoice. Okay, so we're going to create a client. Someone created a client here called Diego Rodriguez, but we're going to create our own. So how about we use Melina Romero. And you are a client, so we're going to display just as a client. We're not going to fill any of this out, but know that you do have the option to fill this information out. Again, this is for training purposes. We're going to leave it alone. Okay, so now we're saying Melina is our client, and we're going to issue an invoice that we require payment maybe when she receives the money, right? Or when she receives the product. So if I am issuing the invoice today, or maybe 10 days from today, you want to get paid, we issue that today, and I'm expecting the payment to be received on the 14th of June. Now, this service, we just created a catering service, so we're going to add that here. And we're going to say that this was a, let's say that it was a networking event. Okay. So we delivered, I don't know, maybe 3 trays of whatever plate that was. And we're going to say that was $150 per unit. So since you are in the state of Oregon, we're going to ignore sales tax completely. We're not going to add any sales tax. And we have an outstanding invoice right now for $450. One of the advantages of using a software like this, and I'm sure it's similar in Wave, is that when you save and send it, we have to enter an email here. Okay. When you save and send it, clearly we're not going to send this to anybody. I'm just going to show you what it looks like. When you send this, your client will receive an invoice that looks similar to this, or a message via email, right? That says this. If you want to preview the invoice before you send it out, you can preview it, and this is the image that they will receive. So we're gonna save it and we're gonna close it because we're not gonna send this to anybody. Now, one thing that Nancy mentioned is that she receives 50% or she requires a 50% deposit, correct? Okay. And did you have another question, Nancy?
Yes, when I do my invoices, I use Square, but when you're using invoice on QuickBooks, can they pay through QuickBooks, or is that like another, you still have to go through Square to receive a payment?
If you're using Square already to receive the money, then chances are that you don't have to issue another invoice through QuickBooks, but they do have the option of accepting payments through QuickBooks,
Okay.
and they don't necessarily have to pay you through Square. So you can choose either or. And to do that, let me show you. You're gonna go to the gear icon, back to account and settings. And under here, there might be, well, this is a sample company, so it doesn't have the option. So you will have something here that says payments. And under payments, you're able to record that, or to request, I should say, to request a merchant account. But just like Square, they will charge you a fee for accepting payments. The only difference is that they'll be able to pay it when they receive the invoice from QuickBooks. Okay, so now we learned that Nancy receives payments, and the payments are from the clients with a 50% requirement. So we know our client was Melina, and Melina has an outstanding payment. So what we're going to do is we're going to receive a payment from this invoice, but it's only going to be 50% of that. So we're not applying the full amount, right? So Melina only paid 250. That means that there is a payment or a balance pending. Okay, now notice how here it's sending it to something called an undeposited funds account. And I'll show you what that is in a moment. Okay, I'm gonna save this and close. I'm going to duplicate this screen so that I have two options to view here. Stop me at any point if you feel that this is, if I'm going too fast, or if you need me to slow down, I'll be more than happy to. Okay, so now here, if I search for Melina's name, I find two transactions. One, it's my invoice, a payment that was received, and it tells me that she still owes $225. Now, another thing I want to do is I want to show you a report based on today's activity. So I want to go to reports, and I want to see the sales that I had in the same day. So to do that, to show sales, I want to go into my profit and loss. And the period that I want this is today. So I want to see only transactions that are relevant to today. This is important for accounting method, so I'm going to use both for demonstration purposes. So first, we're going to use the cash accounting method. What that means, accounting cash method means that the money that I received and I deposited to my bank account, I will count that as my revenue or money that I received. But if I choose accrual, I'm showing revenue or sales based on future billing or things that I'm invoicing to my clients, not necessarily the money that I received. And you'll see the difference in a minute. So if I run a report, it'll show me that I have only received income for services of $225. But if I switch this to accrual, because here I'm saying I already received $225 from Melina, it's in my bank account. But if I receive this in accrual basis, then I'm going to show $450 because that's when I invoiced my client. So I'm collecting money. I haven't collected the money, but I'm showing revenue based on services rendered, not money received. Okay. Now we're going to do this with cash basis for now. Now we only have services provided. How about some expenses? Let's assume that now Melina paid the remainder, right, of the $450. And I received that today as well. So I'm going to save and close. Notice how I haven't sent this to any bank account. It's still under something called undeposited funds account. I want you to picture this. The undeposited funds account is like an envelope, that thing that you have that you're ready to take to the bank before you deposit it. So it hasn't made it to the bank yet. Now I'm going to run another report. This report is called a balance sheet. And under the balance sheet, I will show my balances in my bank account. So to do that, I want today's date. And I want this in cash basis. And I'm going to run my report. Okay. Here, again, this is a sample company. So someone already included undeposited funds here. And I'm going to show you where the $450 are. So they are here, right? We already know that we send them over. So what I'm ready to do now is I'm ready to transfer that money to my checking account. So I'm going to do a deposit. I'm going to take I'm going to pause here for a second, and I'm going to walk you through what we did already. We created an invoice for a service. We collected a deposit. We collected the remainder of the deposit. And now we're going to deposit the money into the checking account. Now, what happens when I deposit this is that I have to deduct the fees that I pay, right? So we know that we have fees that have to be paid. So I'm going to use this new button, that's what I meant to say. And we're going to make a deposit. So a bank deposit, and again, we're going to use today's date. And now I'm going to deposit that to my checking account. It tells me the current balance of my checking account. But there is one thing that I have not included, which is the expenses. So I have this and this, the deposits, but I also need to include, in this case, it's a vendor. So we're going to use the vendor name here is Square, because Square is going to take the money that they do, or the money that, you know, they charge for the fees that they charge me. Now, in the account section, I'm going to use either a Square fee account. I can create this, or just say a bank fee or bank charges. I'm going to say this is a Square fee. Now the amount, I'm going to make this up, and I'm going to say that it's $10. So in reality, the money that is going to be deposited to my bank account is $440. My sales were $450. My expense was $10. Okay, now we save and close. And I want to show you how this gets represented in your checking account. So your balance increased, your undeposited funds decreased, but more importantly, here, we're going to show your money deposited, the bank charges, and now we have a net income. Now there's one more section here that we haven't added for the day. So this is just one transaction, one sale, one bank fee. But also in the same day, Nancy had to go and buy materials, right? Because she has to buy materials to deliver them. So we're going to manually add an expense. To manually add this, we're going to do a new transaction. We're going to call this an expense. And let's say that, where do you normally buy your materials, Nancy? Just a name. Can you say?
US cash food or yeah, US foods.
Okay, let's just say Safeway. I'm just gonna use this for fun. Okay, so you had to go to Safeway and now we're gonna buy raw materials. Remember we created that account for raw materials? And we're gonna say that whatever description you want here, flour, sugar, anything. So let's assume that you spend $150. Okay. Now I save this and I close it. Now I'm going back to my reports and I'm going to bring up a profit and loss statement using today's date. And I want this to show in cash basis. So for this transaction that we created, only 2 transactions. Here's the interesting part. We have an invoice for services. We receive the money. We have purchased raw materials and we have bank charges that we paid. So technically, the net income for this business for one day, it's $290. Although the money that this person received was $450. If I subtract the raw materials, the gross profit is $300. Okay, now here's a very manual, very simple way of showing how a profit and loss statement is different from what you have in your bank account. Many times, business owners guide themselves to to finance their businesses based on what they have in their bank account. And rarely I see a business owner looking at monthly reports that show how the business is performing, what are the sales minus all of the expenses. And then once you're able to arrive to this section here, that it's a net income, that's when you can actually see the behavior of your business. I wanted to do this example very briefly because it allows you to see how one transaction can really affect the other, okay? But I'm going to spend some time and I'm going to run a monthly profit and loss statement for this sample company, and we're going to dig in and try to find out how is the financial situation of this business. Before I continue, do we have any questions?
I have
Yeah.
a question for tax purposes.
Mhm.
Do you recommend creating an invoice if I'm using my services or I'm providing my services for free, whether it's for advertising or like giveaways on Instagram, or I'm donating them to, you know, a school or something? Is it better to create an invoice and add like the 100% discount, or is there something better to do on that part?
Okay, so when you're donating, you're not actually receiving any funds, right? So it's not a business activity. You're calling it a donation. So yes, you have materials, but you're taking the loss. So in this case, you're only recording the purchase of the materials, but you're not generating any sales. So the donation, unfortunately, is not something that it's deductible for certain business structures. the donations or contributions to entities or charities are typically listed for personal purposes, and that's a different topic. But for business, if you're donating the cost of your services, it's unfortunately it's not deductible. But when you say that you give your services or your product in exchange for something else, then that is a transaction. And for tax purposes, it can be represented as a transaction, and that is called a barter exchange. So you're exchanging your food for a marketing service. So you record the sale and you report that with your tax accountant. Or exchange of services. You can call that as an exchange of service.
So for say, if I'm donating my services and whatever the organization is giving me I think it's a 1059 or 1259. There's a form that they give you with their tax information. What does that mean then?
You will report those contributions on your personal taxes. So you're donating to them.
Oh, okay. So it has nothing to do with the business?
Not with your business.
Okay.
Okay. Any more questions before we dig into this company? No questions. All right. So now let's have a little bit of more fun here. And we're going to use this year for this company, and we will do a previous year comparison. So we're gonna have, oh, there's nothing on the previous year. Great. Let's remove this and use only this year. Now, keep in mind, this is a landscaping business. So we're gonna switch gears a little bit here. Notice how there are other items. There are discounts, there's income, there is services for, of course, the industry and landscaping. So in this case, the total income that this business made is $5,530. Now, based on this, we have cost of goods. Here's our raw materials that we included. And below that, we have all advertising and all the operating expenses. Based on this information, what do you think the business performance is? Any volunteers?
It's at its loss, like they're not making any profit.
Right. So for the year so far, it's a loss of $1,614. But notice how we have a profit, a gross profit. So this means that the business is able to recover from the amount that they spend in materials or cost of goods sold. They're able to produce more product to sell it. Unfortunately, they have a lot of expenses. And these expenses are the ones that are not being covered entirely by the business operations. When something like this happens, what would you recommend to this business? What would you do in this situation if your business is showing a loss?
Well, we need to know what that miscellaneous is, because that can be owner's withdrawal, couldn't it be, or no?
Could be, yes. Okay, let's explore. Let's find out. What is this? $2,916. And to the point that Juan, I'm sorry, was making, is that sometimes the transactions, you're able to categorize them, but if you don't assign the correct category, they're gonna land in the wrong section of your reports. So if you don't have the correct category, you will end up showing inaccurate information, and when taxes are filed, there is a section for miscellaneous expenses, but just like Nancy did right now, the IRS is going to look at a miscellaneous expense and say, wait a minute, why do we have $2,000 in miscellaneous? What is miscellaneous exactly? So I'm going to pick this transaction, the first one. And it says that it was a purchase to this vendor, okay? Now, if it's a hardware store, what would you think this category is? I'm just curious. Anyone?
It's not material. It can be material, but I can't think of the word. It's like
Any
obviously a
tools?
tool. A tool.
Tools or equipment. Thank you, Lisette. Okay, so let's say that this was equipment, right? For $250. Based on that amount, maybe there were tools. So what if we do tools? The transaction or the account does not exist. We're going to add it. And we're going to call this an expense. And these are going to be other expenses or supplies and materials in this case. And just for the amount, we're going to call this small tools. Okay, it's still an expense. I'm just going to change it from a miscellaneous to that. Now, I did have a payment here to an insurance company for $2,000. If it's an insurance company, chances are that it's not a miscellaneous expense. So I'm going to call this insurance. And I'm changing this, saving and closing it. And the last one, based on the vendor's name, I will assume that these are materials. What do you think? We're going to call it job materials for now. Save and close. Now, we get rid of the miscellaneous expenses, but we're still at a loss.
When
Right.
it's more of a loss because it's not including the owner's labor.
Exactly. Now think about the owner's labor. Okay, so how would you monetize the owner's labor?
So it has to be payroll, even though it might be, sole proprietor or self-employed, but there has to be a section where you're including that expense somehow.
Somehow, right? So you have to pay bills. We went into owning a business because we wanted to do, yes, we wanted to follow our passion and we wanted to create a product that we can sell, but at the same time, we need to pay our personal bills, right? So what happens when clearly you don't have money, your business is not producing money, your business is at a loss, but we're going to find out if you have money in your bank account. Now, if you show that at the end of the year, or for this year at least, we're going to say this year to date, you have $1,491 in your bank account. It's kind of like a contradiction. You might say, wait a minute, how can I have $1,491 in my bank account when I know I have a loss? Right? It's a little of a contradiction. The reason is the profit and loss statement or the income statement is a statement that happens in the same year. Your balances don't carry over to the following year or the following period. The balance sheet shows balances that sometimes carry over. For the most part, they carry over. So the ending balance in your prior year is going to be the beginning balance of the following year. So you may have closed the year with maybe $1,000. So that's your beginning balance for the following, but your losses ended in that period. So you don't carry losses forward to the next period. Did that make sense? So it is possible to have a loss in your business and you have money in your bank account, or vice versa. You can say, wait a minute, I have money here. So let's create that scenario. I'm just going to create a whatever cell just to show that's, that you can have. We're going to create a cell receipt, and we're going to choose our favorite customer, Melina, and we made this cell today. We're going to deposit this to our checking account. And in this case, I'm going to say that, oh, it was services. We said catering, right? Here we go. Catering, and in this case, we're going to have $3,000. No taxes. Save and close. Okay, at the same time, now we're updating the cells. We no longer have a loss, right? But I'm going to say that the money that I received into my checking account, which is now here, I've increased my balance. Now I have $4,491. So because I know that I have that money and I know that I'm not at a loss, I'm going to take the money out to an owner's draw. So I'm a sole proprietor, I'm going to pay myself as an owner draw. But that money that I pay myself is not an expense because I am not an employee of the company. I don't have payroll that I'm running through my company. It's a owner draw only. And the owner draw belongs to a different report. So I'm going to create an expense. And at this point, I'm just going to take the money out in the same day. Gonna add me here. Okay, so here my category is an owner draw. It doesn't exist. We're going to create one. The owner draw is part of this equity account. And it's an owner's equity. We're going to save that and close. And let's say that I took out $2,500 to pay myself. Okay. So now we're going back to the profit and loss statement for today. I still have a profit of 1,300. My balance now should have gone down from 44.91. I have only 1,991. And I increased, or I have a negative number here in 2,500, which is the owner's draw. So you can have a profit, you can pay yourself and still have money in your checking account. There are three different aspects of this reporting. Number one, when you're a sole proprietor and you pay yourself, you don't pay yourself as an employee, you pay yourself as an owner draw. The owner draw does not mean that you're having an expense. In fact, it will not show as an expense on a profit and loss statement. It is part of the balance sheet account, and it's a record of how much money the business is withdrawing, or the business owner is withdrawing for his or her own personal use. Okay, I'm going to pause here for a little bit. And I want to bring this to the floor and ask you, in our group, how many sole proprietors do we have? Okay, one. Nobody else? Nancy, two. Okay. As a sole proprietor, may I ask, what are the biggest challenges that you see when it comes to reporting, understanding taxes, and all of those things?
Reporting and understanding taxes. I think for me, it's at the end of the year, when I combine my profit and loss with my W-2s. I will say in the past 2 years, my losses have saved me from my W-2s because of the amount of money I make. But I think understanding how they combine when you do the 1040 form and attach the Schedule C and things like that, that's when it's not complicated, it's just hard to understand because of the terminology.
Yes.
And because I'm not an accountant, I don't know the whole terminology, and just making sure that the person that does my taxes, I can rely on. And honestly, last year, the person I did them with, I wasn't satisfied. So this year I found a different person that gave me that confidence of like, okay, he's actually explaining and sitting down and telling me what to do or what's best in my interest, compared to the last person where like, oh yeah, whatever. So not only that, but when I was looking for an accountant, the first person that I went to, she kind of stereotyped me and said like, I'll do your taxes, but you're responsible. So if you tell me that, you didn't receive no cash, or that you only received so much cash, that's what I'm gonna put, and you're responsible. So I kind of felt a little uncomfortable because I'm starting, like, I don't know people, fraud, or they can do fraud that way. So the fact that she threw it out there and said like, oh, this is what people do, and telling me, or like maybe giving me the sign that I might do that. I don't know. It was an awkward conversation with that person. So I didn't go. I just met with her to, for her to explain me how things go. The first year I did on myself because I didn't have no expensive. I just was starting and doing that. The second year I did go with someone else, but Square and QuickBook were like lifesavers because Square was doing my payroll, and they're the ones that were doing like my quarterly report, all my taxes, everything.
Yes.
And QuickBook, both of them, I was able to download an Excel sheet. Everything was categorized. I didn't have to go back and like scramble through receipts or any of that. I still save them for my purposes, but it was really nice to just be like, email, and that's all the information they pretty much needed from me.
Yes, and I agree with you. It can be sometimes threatening, and having an accountant or someone that helps you with your business should not feel like a threat, right? It should feel like you have a relationship with an expert that you're coming to because you need their help, and you're sharing very vulnerable and valuable information. So I'm glad that you found someone that can help you. It's something that unfortunately happens more often than what we would like. But yes, there are a few tax professionals that are more concerned about the transactions rather than the education. So I'm glad that you're coming to this type of workshops, because we have time to go over, some of the concerns that you have. I do want to spend some time with the automated transactions. So we're going to have time to do that, to kind of show you how things can be categorized or recategorized in QuickBooks. And maybe this is something that we can, I'm just thinking out loud, that something that we can think about for future for future workshops, maybe how to record Square transactions on how to review Square reports, because I see that that is a very common tool that business owners use lately. So I don't know, I'm just throwing ideas out there and see if this could be beneficial for a future workshop. But for now, yeah, thank you for sharing that, Nancy. It can be confusing. With the information that we're covering today, did it help you a little bit more?
Yes, yes, it did a lot. Because even though I've been in business for at least 3 years,
Mhm.
the business that I currently have, it's kind of the second part of my first business. So my first business, I started in 2021 with a food cart of snacks and things like that. And now that I think about it, I think I wasn't 100% prepared to do that, but I
Mm.
took the chance and did it. I was open for a year, and then for me at that time, it was more about the time and the time I had and other things I had around my personal life that I couldn't keep my business open, not necessarily like the profit and loss thing. But I think that had helped me, navigate now this new adventure with more knowledge and
Congratulations.
coming to like things like that. Like this meetings have helped me. I will say that I think it was last week or 2 weeks ago, you did a like kind of similar presentation through Miso. I don't know if you remember.
I was, yes, I was answering some questions because they were testing. Yeah, yes. They were
Um,
testing, somebody else was presenting. I was part of their support.
Yeah, but I can't remember who was the organization, but I know it was, you were there, some of Miso people were there too, but this course today compared to the last one I attended, it's completely different, and the way you explained it here was more understandable than that last time. It might be a language thing because that last one was presented in Spanish,
Yes,
and we go back to like the terminology, right? If it's hard for me to understand the terminology in English, it was harder to understand the terminology in Spanish.
yes,
Harder. So for me,
that
that was
can happen.
confusing because like everything that I know about my business, I learned it through English.
Yes.
So when you're translating that in your head in Spanish, is like double the work.
Thank you for the feedback. Thank you. Thank you,
Nancy,
Nancy.
this is actually exactly what we're looking for because we have a survey to share out with everyone to complete, and I would love for you to fill it out with what you just shared. In order for us to continue doing workshops like this, we need that kind of feedback. So I really appreciate your candidness and what you've shared. I do want to be respectful of everyone's time. We have a couple of last minute questions here. I want to address the one in the chat from Andres first. He asked in Spanish, are owner withdrawals taxable? So wondered if you could please answer that. And then it looks like Juan has his hand raised as well.
Okay, excellent question, Andres. And the answer is typically yes. So what happens with, and the reason why I wanted to spend time showing you the profit and loss statement is to get an understanding of how the income and the expenses are broken down. When you file your taxes, if you are a sole proprietor, chances are that you're going to give this report to your tax professional. So you have your income, they're going to categorize all of your expenses, and typically this net income amount is the amount that gets reported in that Schedule C that we talked about. So the Schedule C, in this case, will show your income, your profit, the cost of goods sold, and here at the bottom, it'll show if you have a net profit or a net loss. If you're using this amount as your net profit, that is the number that gets entered under line item 31. This number is the number that is used, your net income is the number that is used to calculate your taxes. If you are self-employed, typically you paid approximately 15% of the net profit. So if we bring this down using this report, we're going to make an estimated calculation, and notice that I'm saying approximately 15%. So chances are that you will pay about $208 approximately for self-employed taxes on this income, this net income. Now, this is only one portion of your taxes. But if you have an individual form 1040, and you have more income from different places, you're going to pay taxes here and additional taxes. Notice how line item 23 says other taxes, including self-employment tax. So in addition to all of your taxes, you're going to pay $208 more. I know that it's a long answer to Andres' question, but I wanted to illustrate this with the report that we are using as an example, just to kind of paint a picture of what you would have to pay if you are a sole proprietor that has a net income for the year of about $1,300. And if you have more income from other sources, you're going to pay an additional self-employment tax. And that is normally listed here in your tax return. Okay. All right, next question. I see Juan. Sorry, Juan, that you had your hand raised
That's
for a
right.
while now.
Yeah, I was just gonna ask if there's a formula for the quarterly payments.
It really depends, and it should be part of your, you should be able to get that from your tax professional, because it's typically based on your historical payments. So if you're referring to federal quarterly payments, right?
Yeah.
Okay, so the estimated tax payments, the way that we calculate them is based on prior year calculations, but the IRS has something, no, this is withholdings on W-2s. I know that they had some type of withholding calculators in the past. When you don't have, here, I'm gonna share this in the chat. So it talks more into detail about estimated payments and withholdings and all that stuff. And it also gives you a form for estimated payments. So I'm gonna drop this link in the chat. And you can send the estimated payments. It's a form. Again, the IRS just likes to make people more confused about their taxes, and they attach forms to other forms. But one short answer to that would be, you need to focus on this. Let me show you. And you seem to be very familiar with formulas, and if this is something that you're interested in, I would recommend to spend some time in this publication. So it's the self-employment tax deduction worksheet that is usually to calculate estimated taxes. So following these steps, you can arrive to somewhat an estimated amount, and it's tied to this worksheet or this table. But if you already have an accountant that you're working with, I strongly recommend to go back and review if you had prior year income from your business to, to go over this with them, because normally you can get an estimated tax or a schedule for estimated taxes with your accountant. I wish I had a simple formula. Unfortunately, there isn't. The IRS just makes it more complicated. And to the question that Andres asked, did I answer your question, Andres? Just making sure.
Sí, muchas gracias.
Okay. Okay, perfect. Okay, excellent. Just wanted to make sure that we address the questions. Okay, so the next thing I wanted to just go over, we did the live memo, the live demo, I'm sorry, not the memo, the demo.
So Astrid, I did want to say we're at time.
Oh, excellent.
Yeah, we have this workshop going until 8 o'clock this evening. Was there
Okay.
something quickly that you wanted to touch on? Okay.
No, I wanted to just double check that we were okay with time, and I was going to address questions, but we have been answering questions, and since we already answered questions, that's it, we're done. We made it through. And I'd like to introduce you to my team. My two sisters and I work together. That is my website. I invite you to visit it, and so that you get more familiar of what I do. And thank you again for having me. It's been a true pleasure. I appreciate your time and spending the evening with me.
Great.
you.
Astrid, thank you so much. This was incredibly valuable. I mean, we can see just from the questions alone how much everybody appreciated the content. So thank you. As a reminder, everyone is getting a copy of this presentation in both English and Spanish. That'll be sent out to you tomorrow. I do welcome you to help our Empresarios program, please, by completing a survey. I've just dropped it into the chat. If you wouldn't mind clicking the link, Nancy, this is definitely geared towards you. Would love to hear, whatever feedback you have for us so that we can, continue to do these types of workshops. Additionally, we did mention our Empresarios program. If you are interested in learning more about the program and our services, we offer an orientation, again, called Camino a mi Negocio. The next one is scheduled next Wednesday, June 12th at 6 o'clock. And Tanya, if you wouldn't mind dropping a link for that registration, folks can click on that link to register as well. Astrid, thank you for putting your website as well into the chat. Appreciate your time this evening and everyone's engagement and participation. Thank you.
Thank you.
Yeah, once you have completed the survey, if I could get a thumbs up, that'll help us know it's been submitted. These are anonymous, but we do appreciate the feedback, not just for our program, but also for our presenter, Astrid. So appreciate anything you have to share. Great, and Tanya, thank you. I see that you have dropped in the link for Camino a mi Negocio. Appreciate that. I see lots of thank yous in the chat. Gracias. Great, thank you. All right, hopefully folks are wrapping up the survey. I see my first thumbs up. Thank you so much. And I hope I'm pronouncing it correctly. Thank you for joining us this evening, Smriti.
Yeah, Smriti, yeah.
Smriti, thank you for
Thank
joining.
you.
It looks like folks are hopefully wrapping up here. Thank you, Juan. Translated, it means, gosh, I'm terrible at translation. No sé va a leerse. Yeah,
Interpretación.
thank you. Yes, thank you. Andres, thank you. I see a thumbs up from Agustina. Wonderful. Thank you so much, everybody. We appreciate your time this evening, especially the extra time going over. Again, super valuable information, and we appreciate.
Thank you very much. I learning a lot in this
Oh,
meeting. It's very a lot of information for me, and thank you so much.
that's great. Thank you, Andres. Appreciate it. I hope everyone has a good evening, and thank you again. We hope to see you at our next ABCs, which is this Thursday, 5:30 in the evening, and we'll be touching on licensing and food safety with folks. Thank you, Norma. Gracias. From Multnomah County and the Oregon Department of Agriculture. So gonna keep doing exactly this. So thanks again, everybody. Have a good night.
Thank you.